Welcome back. Billionaire backlash. Mark Cuban stepping up his attack on Donald Trump with Neil Cavuto yesterday. He issued this warning for investors.
I have my Trump hedge on. In the event Donald wins, I have no doubt in my mind the market tanks. And so I literally have put on a more than 100% hedge that I'll put on stronger if it looks like there's a better chance as we go forward.
But what about other investors? Let's talk about that. Joining us right now is Jason Trennert. He is Strategist Chief Investment Strategist. Good to see you, Jason.
Good to see you.
Do you agree with that? Markets tank if Donald Trump gets in?
No. I mean, I think there may be an initial reaction in that regard because it's a fear of the unknown. By the same token, though, if the markets were to sell off, I would be a buyer. When I look at the policy mix that we have right now, we have very easy monetary policy, but we have tight fiscal policy, tight regulatory policy, and trade, I would say, is probably a push. We get Donald Trump, you're going to have easier fiscal and easier regulatory policy along with easier monetary policy. So that is going to be very good for the economy. Trade, I would say, is the big question mark. But I have to say both candidates right now are being pushed into being somewhat more hawkish on trade. So I'm not so sure there's a big difference. And frankly, anything that stimulates capital investment, capital formation, in my opinion, is exactly what the economy needs right now. And I don't think you're going to get that with essentially a third Obama term.
I think this is a great point because the fact is Donald Trump is talking about a 15% corporate tax rate. I mean, if you've got, and he's talking about companies bringing money back from overseas, you have to believe that's going to spur investment.
Listen, the U.S. tax code is 3.5 million words, okay? The New Testament and Old Testament together are about 800,000 words, okay? This, as a businessman myself, I can tell you anything that simplifies the tax code, that makes it easier to do business, is going to result in more investment. It's just, you know, the lower prices are, the more you get of something, and that's, I think, I feel very strongly that would be very helpful.
Well, and you look at Donald Trump's economic plan, which he laid out in Michigan, was a very solid one. He talks about taxes, and he talks about bringing that down to around 15%, as well as when you look at overseas, we have Great Britain going to 17%, possibly 15%. We're just not competitive globally in the G20 on our corporate tax rate, which is a shame right now. So for him to talk about that, you're seeing the market really give in to the fact that whether Donald Trump or Hillary Clinton wins, it's going to be a stable market. There's not going to be huge sell-off.
Well, Hillary wants to raise taxes, and if she's raising taxes, Dagan, on the highest earners, that's going to hit small business. So how does that grow the economy?
Right, and she also wants to raise capital gains taxes in a way. She wants to complicate the tax code, particularly with capital gains taxes, and midterm capital gains tax rates go back to the level they were during the Jimmy Carter administration. So that's never good for investment. But do you worry we've gone so long without a recession, we've got valuations that you kind of have to hold your nose depending on the company?
Well, I think that's fair, and I think there is also a certain element of truth in the idea that this is a somewhat manipulated economy. There's no two ways about it.
Because of the Fed.
Because of the Fed. You have 0% interest rates. And so,
other central banks around the globe, too, right? I mean, we've got $12.7 trillion on balance sheets of the G7 economies.
Well, it's, listen, I think you're providing all the wrong incentives for companies, really, right? If you can borrow money at virtually zero and just buy back stock without investments, that's exactly what companies are going to do. That's what they're doing, and that's why this is in some ways a very hollow recovery. So, Dagan, to your point, I am somewhat worried. By the same token, I don't think it changes until inflation becomes a problem. If inflation stays low and interest rates can stay low, stocks can grow. Stocks can, and I think what's going to happen, what is happening, is that the valuations of the very best companies, the strongest companies, are going to go. They're not quite at nosebleed levels now. They're high levels now. I have a feeling before this is all over, it's not going to feel that strange to pay 25, 26 times earnings for Coca-Cola.
I would agree. Those earnings are worth more in a negative interest rate environment. That's why you're seeing companies like Clorox trade at 26 times multiple. But they are growing in this environment.
I want to get Louise in here because, you know, Brexit. I like to look at Brexit as it relates to the U.S. election. I mean, you said, you know, you made a great point in terms of the policies coming out of these two candidates. as a way to push back on Mark Cuban's ideas that the market tanks if Donald Trump gets in. But, I mean, everybody missed Brexit, Louise, right?
Yeah.
And now look at the UK economy.
Exactly.
Everybody told us how everything was going to just fall out, you know,
Yep.
and
Well,
it was
those of us,
hysterical.
I was involved in the campaign, and I knew that it would not. I remember going on Fox the day afterwards when the markets were panicking and crashing, and I said, buy on the dip. I may not be a financial professional, but I knew perfectly well the markets were going to come right back up, and indeed they did. But part of that is free trade. Britain is now free to conclude its own trade deals. The city, for example, can conclude a trade deal with Singapore. I think Donald Trump really wants to solidify his financial advantage. He needs to get off this pro-Putin, anti-free trade. What is anti-globalism? You know, Republicans are in favor of free trade. He has to be a pro-business president. He's halfway there on the taxes. He's got to get rid of this anti-globalist stuff. You know, Republicans believe in free trade.
Which is why you said trade is one of the more important.
I think, you know, part of this election, and this gets into something that's not my bailiwick, but it's a social science, but I think that a lot of regular people are questioning what the intellectual elite have been telling them is good for them. And whether that's free trade or open borders, the elites know it. And it's negative interest rates is the latest, I would say, is the latest thing that elites are telling them are going to be good for them. And it's not working out.
Where I come from, they don't call them elites. They have other words for them.
Well, and Hillary Clinton has been the queen of crony capitalism and sending through the foundation as well. So that trickles through the economy.
Real quick, while we have you, yesterday, Amazon at an all-time high, NASDAQ at an all-time high. Would you buy technology right here, Jason?
I would. I would. We talked about it before. I mean, we talked about the company. Some of those companies don't have dividends. There's a lot of old tech, you know, I would say the Ciscos of the world, the Microsofts of the world, which have remarkably, just given my career, have become yield plays. I mean, I remember when Cisco was trading at 100 times earnings in '99, and the concept of them paying a dividend would be seen as absurd.
Apple's a yield play.
That's right.
Apple's a yield play.
Yeah, and Microsoft.
So there's, you know, in a world of negative interest rates, those dividends become very important.
The tech sector yields more than the 10-year Treasury.
Thank you so much, Jason.
Thank you.
Jason Trenner, a strategist there. Straight ahead.